Good morning, good afternoon, good evening, wherever you may be. This is Sid from ElliottWavePredictions.com, and this is the Sunday, January 10 of 2016 edition of my counts webinar, where I'll go over all of my Elliott Wave counts and associated Fibonacci price targets for many of the world's major stock markets, commodities, currencies, and bonds. Hurst cycle analysis will also be considered on the great majority of items. Before we get started, I'd like to bring over my disclaimer. It's at my website, ElliottWavePredictions.com, and it's there all the time under this tab right here, the disclaimer tab. So please read that in full and be aware of it. Thank you. Okay, well, we had a historic week, a really amazing week in the markets last week, and the good news is that in last week's webinar, I felt like the week would be a down week in the markets, and predicted that, and then but felt that by the end of the week, Thursday or Friday, we would start into fairly significant bounce, a partial retracement, essentially, of the downward movement from last week. But the markets, or the stock market, the S&P, moved below my target. I had a minimum depth target of around 1970, as I recall, and it moved down past that, and I felt like it would move to that last week, and slightly below, but it moved down to that and kept going. So the question is that on the shorter term charts, is that leading expanding diagonal really what happened there, or is something else going on? And so we'll be covering that. I will say this, there's some items that suggest that the leading expanding diagonal may still be the correct call, and I'll show you those, and they'll be spread out among the different things we look at. One of them is the YM futures contract, the Dow Jones Industrial Average. It still has a decent look as a expanding leading diagonal on the short-term charts. Same thing with the USD JPY currency pair. And it's also possible that the Shanghai composite may be showing a similar pattern, but there are many other items that I think have moved down too far to be associated with that pattern. So this week, I'll be trying to determine what's the most likely. If that pattern is correct, then we would get a big bounce, a big retracement bounce, fairly quick, just over a few days, but substantial, before even stronger downward movement occurs. If that count is not correct, we may already be in wave 3 of 3 to the downside in the markets. So first of all, I want to say thank you for joining me this week. I've lots of new people, first-timers this week, and this is a record week for a number of subscribers to my weekly counts webinar. So thank you so much, and I hope my work is most beneficial to you. This has both my main and my alternate on it, and it suggests that we either saw an A, B, C up through July 20th, and that was the orthodox end of a zigzag, and therefore the end of cycle degree, wave D of a triangle, or wave B of an expanded flat. Up from the 2011 low, which I am calling the last 4.5-year cycle trough. 1, 2, 3, 4, 5, and this contracting ending diagonal that started in October of 2014 was a overlapping contracting ending diagonal that ended in truncation on July 20. And then from there, I believe we got wave 1, wave 2 in black is done, and we are in wave 3, and not only Am I suggesting we're on the main count now that we are in wave 3? I believe we're in wave 3 of 3 to the downside. So moving into the daily chart. The movement down was aggressive enough that, well, I'll show you. On the YM contract, I've been counting 5 waves down into the August 24 low, and then a corrective structure, WXY structure, ending essentially on December 2nd, something about December 2nd. And then there's this expanding leading diagonal that it still looks pretty legitimate here. And it started with 3 waves down. I mentioned this last week that everything seemed to be carving out 3s, and that suggested a leading diagonal, but it appeared to be expanding. And you can see usually wave C of wave 5 of an expanding diagonal will nearly reach a line extending from the extremes of 1 and 3, but it won't quite be able to make it there. Now that's typical, but it doesn't have to stop there. As a matter of fact, if you look in your blue book under expanding diagonals, it states that the 5th wave of an expanding diagonal, the only requirement is that it be longer than wave 3 of the diagonal and that it subdivide as an ABC. So the fact that it overthrew that line by a little bit doesn't necessarily count it out as not being a leading expanding diagonal. And here's the big difference. If it's a leading expanding diagonal, the next, usually, not always, but usually, diagonals are deeply retraced. And if we're going to get a deep retracement at this point, it would have to be a simple ABC, in my opinion, ABC zigzag. And using last week's Hurst cycle analysis, was thinking we would bottom on Thursday or Friday of last week and then spend the next 10 days or so in a steep recovery. So the YM contract is still suggesting that that's a possibility. However, many other items, for instance, let's look at the S&P. Let me go back here. I'll look at the old count on the S&P. This was the leading expanding diagonal that I had going on. 3 was longer than 1, 4 was longer than 2, so 5 had to be longer than 3. And there's that target of 1970, 59, and it needed to move to that in an ABC structure, but it fell way past that target. And it moves so far past that target that now, even if you mark this as an ABC, it moved past where C would equal A. So this is, in my opinion, does not have the right look of an expanding leading diagonal. And even though these waves appear to be carving out 3 wave somethings all the way, this blew past that line extending from the extremes of 1 and 3 so far that I think it makes the expanding diagonal questionable at this point. And that's why I think you'll see, and I'm going to call this the old count, because I'm moving away from this count, and I'll unveil the new count here and new Fibonacci targets here in just a minute. So moving back to the Dow on the daily chart, I think this was a wave 1 in black, or wave A of a zigzag, if the alternate is correct, and we're just going to get a wave 4. I'm showing this as a corrective move up for black wave 2, and that was through early November, about November 3rd, and then a 1, 2, 1, 2, and now we're in wave 3 of 3. So what you'll see on this chart new this week is a number of targets that are based on Fibonacci relationships of wave 3 to wave 1. So the first one I want to point out is if this is a wave 1, then a wave 3 in black will equal wave 1 in black times 1.618 at 13,501 in the Dow. That's right, 13,501. So that is the target for the black wave 3. And then if this is wave 1 blue within black wave 3, then blue wave 3 will equal, and frankly, since this is 1.618 on black, then we're probably going to get a long blue wave 3, as you typically get, because this would be a wave 3 of 3. And so I'm expecting that wave 3 blue would be 4.236 times the length of wave 1, and that target is at 14,545. So I think we're in wave 3 of 3 to the downside now, and that any slight movements to the upside are going to be very short-lived. Now they might be quite a little spike, but this count is figuring that they're going to be very brief and not very big. It's also interesting that when I do the Hurst cycle analysis just 1 week later and pretty much put the cycles in the same spots, the 40-week back here, the 20-week here, and this is what I was doing last week, and the 40-day here, there was a expectation of an 80-day cycle crest in about mid-January last week, but it has, because this has moved so deeply now, Hurst has pulled that forward. It's changed to where it thinks the 80 days is going to be. It's now, that's over about February 4. So that seems to fit with the peak that's going to be associated with blue wave 4 now. And there's a 20-day crest. The only crest between now and then, there's a 20-day crest around January 12th. So that is Tuesday. So yes, we could get a little bounce here for a day or day and a half is all. And then I think it's downside continuation.